Hi everyone, it's Stuart here again, and welcome to December the 29th. It's Monday, December the 29th, and I hope your break, those of you enjoyed Christmas, went well. Mine certainly did, or ours certainly did. It was much fun, quite quiet, just is C and I. But anyway, I'm going to start with an advert. I know we're going to review 2025, but our 5 for 10 account trade has been extended. So use the code 1045. You can see there on the screen next to me. It's been extended. It did close on the 28th, but the bosses have decided to extend it until January the 1st. You can see my scroll on the screen there. It's very badly done, isn't it? So our 5 for 10 or 10 for 5. So you get a $10,000 account. You pay for a $5,000 account. It then gets upgraded to a $10,000 account when you use the code 1045. So 10FOR5 gets you pay for a $5,000 account, whatever account you want, and you'll get upgraded to a 10K account. There's some confusion when we first launched it last week. Some people were thinking they were getting a $5,000 account and a 10K account. It's not. It's one account. You pay for the $5,000 account. Although Santa Claus has left us, he's still offering these 10 for 5. So give it a go. We're here to help. Any questions? The guys and girls at the general chat tab on the our Discord group, John, our Discord group, they're there, virtually, it's not 24 hours a day, but, they're there all the time. They're very active again this morning. Toby, Christian around this morning. Darmix just celebrated with everybody. His payouts have now gone to $25,000, he's saying, from us here at the Prop Day. So he's had his 8th payment. Very steady. I mean, it's not big numbers, but steady away. It's really, really sensible trading. I haven't seen his account, so I don't know. But, he's not taking massives out. $1,000 on the 12th, $2,000 on the 19th, $3,000 today, the 19th. Obviously, it's building, but good job to him. He started small and he always celebrates. There's another $900 there. Lots of people putting up. I mean, there's lots of people as well that don't put up what they. Obviously, we're all individuals, and people try to keep quiet about lots of things. But lots of people getting payouts that don't share it with us here on the page. But if you go to the payouts section on the Discord group, that's where all the numbers are. And I say, these numbers build up. So 24th of November, one of his first payments here are $1,300, $1,400. Sanyan Pal, just a few $100. But that's how it starts. Have a system, trade your system, and exercise your edge. That's what it's all about. Success in trading, understanding the rules, and accepting your losing trades. That's the big thing. I say to people all the time when people ask me, what's the one rule you should try to adhere to all the time? Or what's the one thing a new trader, obviously the beginning of the new year is always a time when people start to dip into the trading world. And it's really accepting that you're going to lose a lot of these trades. Don't believe all the hype you see, the guys in Dubai with their Ferraris and their cash and their Rolexes. All of that exists. All of that is real. A lot of it isn't real as well, remember. The Ferraris are hired, or the models are hired for a few hours. The photo shoot is all doctored as well. But, there are very successful traders around the world. And the roof, the ceiling, as I say, is limitless in this business if you find the thing that works for you. Dharmic clearly has, and he's just repeating, and that's the key thing, and that's what I've always done. Find something that works. I know my system works. It's worked year in, year out. It's worked again this year. I've shared with you my end of day trades this year. We've had a really good December. First 2 weeks we lost. Remember, we had losing 2 consecutive losing weeks. So the first time in 2025 in the first 2 weeks of December. But we came back with a big bang last week on that massive move we saw in the gold market. I'm sure you're all aware of it. We'll come on to all this in a minute, but a huge move in the gold market. Those of you that are new or not seen this before. We got, stop loss got pulled up, got a bit too tight. Before we got to 4,500, we got to 4,550. Big reverse on the last few days. Not unexpected. Obviously, cashing out profit isn't a profit till it's bagged. And we got in here on the 10th of December, and we managed a near 5% market move here. So very, very happy on that. 2,000 points from a points basis. Remember how we trade gold, but it was a $200 plus move from 4,227, and we were stopped out at 4,435. Say $207 move, thousands of pips. And we're down again today. We're under 4,400. Is it an issue? Well, probably not, given the volumes and given the amount of profit that's been bagged in. Remember, that's just a 4-hour candle. You can see there on the chart. So we'll come back to all of this in a minute when we go through our review of the year. So, there's anything anybody here wants to look at in particular? Let me know. Other than that, I'm going to go through just the major crosses. And tomorrow, same time tomorrow, we're going to look at, or I'm going to look at, it's only my own personal view for what it's worth, what may happen or may not happen for 2026. Obviously, really difficult. And it's a bit of fun trying to predict where markets might go. As we'll see in a minute when we look at all the charts, sideways, up or down. That's all it can do, isn't it? That's the key thing with trading, guys. You either win or you lose. It's a binary outcome, or you break even. You're flat, a bit like the markets were on the other day, the stock markets, and that's the key thing. So when you lose, when this thumb gets hit, make sure it's a small loss, and when you get the winning result, make sure you let that run. And that's been very much my philosophy as a trend following trader. But that should be your philosophy, whatever type of trading you employ, whether you're a scalper trading, on every tick chart, or a swing trader, or a long-term investor. It's all about managing your portfolio, making sure at the end of the week, the end of the day, end of the month, end of the year, you've made a profit. So that's the most important thing, and dealing with it emotionally. That is massive issue for most retail traders. The market is what the market is. The price is the price. That is the price. At the moment, the price of gold here on this particular platform, if you wanted to trade it, it's 4,391 or 4,300. You can see it moving around really quickly. That's the price you'd have to pay, whether you think it's going to go down from here or whether you think you're going to go up from here. That's all the brokers do. That's all the platforms do. They give you the option to trade. They put buyers and sellers together. And that's why, if you buy it at one price, you've got to sell it at another price. And that's the spread. And that's where brokers make their money. And it's the nature of any market. So there we go. Anyway, today is all about reviewing the calendar years. We come to the final full trading. Well, it's not even a full trading week, is it? It's many closed their accounts. I know many of my colleagues and friends that trade closed their accounts on the 19th. I was still trading, or we still had a risk on the table, really trading, but so many people closed up on the 19th, and they won't come back. A lot of London traders that I know, retail traders, won't come back till the first or second week, in fact, of January sometimes. So anyway, I just realised my head's absolutely massive still, so let's make me a wee bit smaller, and the chart's a wee bit bigger. So this is the gold chart. So many closed on the 19th of December. We still got some risk on the table. Last week, I'll update again on the Discord group, but we were up to, mainly due to obviously the gold trade, we were up 2,162 points as of the 26th, Friday the 26th. Remember, markets were open on Friday. That gold trade. The other Forex trades, we were up about 60 points on Forex. We had 9 Forex trades, 6 winners, 3 losers. No, we had 10, didn't we? It was 10. It was 7 winners and 3 losers. And we were up 80 points on the Forex. But obviously, most of the points numbers was that massive gold trade. We are still Oh, we were still open on some forex trades. Aussie CAD, Aussie dollar, and Euro New Zealand have all been stopped out either on the 26th when I wasn't watching, or this morning. The three index trades are still open, and that's it. I think I've got very little risk in the market, so it's just the index trades which we had, which was that we were long DAX, the S&P, and the Dow from the 22nd, and they're all still open. But we'll come to the open trades in a minute. Today was all supposed to be about reviewing the markets in 2025, the highs and the lows. So if you just bear with me, and I'll go to some charts I've prepared earlier. Sounds like a chef, don't I? I use the VWAP sentence because it's got the least mess on it. Okay, so let's just go through. Well, let's start with, actually, let's leave the metals, because the metals have been absolutely mental, haven't they? Let's start with in order. So let's do crypto. Bitcoin's obviously had an interesting year. Again, let's just bring up the Bitcoin weekly chart. This is the weekly chart, guys, for Bitcoin. Here on the trade locker, the price action only goes back to the to February 2023. But as you can see, obviously the trend. This is the weekly chart, remember, because we're looking at over the years. The trend remains to the upside, doesn't it? We've had a massive sell-off this second half of 2025, and lots of chatter that there's lots of buyers at 80,000 and 75,000, and you can see that from this potential chart, this weekly chart, can't you? There's clustering here. We're at 87,000 as we speak, but for the last 1, 2, 3, 4, 5, 6 weeks, we've bounced into this 80, 90,000 zone. Last week, remember, we were looking at the massive amount of options that were expiring on the 26th. Watch last week's webinar video for the details on that. There's a huge amount of options expiring on the 26th that expired out of the money. And so that's money that's off the table now. So we might expect some sort of movement from here. But, we've been talking about that for a while. Remember in our previous the charts we used to trade on a daily basis, we had that low, the big low we highlighted here at 75,000, and that 80,000 low we'd got to in the middle of November as a particular low point. So the trend in the short term remains down. You see here over the last 5-6 weeks, it's been down. Huge break under 100,000 there on the 10th, the week of the 10th of November, and the trend is clearly down currently, but we've sort of billowed or bottomed at around about 85,000, but we can't get over that key 92,000 on a short-term basis. We certainly nowhere near getting back to 100,000, and we're literally sort of closer to the 75,000 floor here, you can see on this weekly chart, than the 100,000. So where do we go from here is obviously the question. Well, we'll talk more about that tomorrow, but look, let's just keep things in perspective as well. So we started the year around about here at 99,000. We gained 25. Let's think about it. We lost 25% down to 75,000, and then we rallied from bottom to top $50,000. A big 60. If you'd bought it down here at 76, if you'd done it, nobody catches the bottom, nobody catches the top, do they? But for extended terms, we've moved 50,000 from 75,000 to 125,000. That would have, you've been buying down here, you would have gained 60 odd percent of your investment if you managed to get out around about 120,000, 125,000. But obviously it's then given up a lot of those gains. So we are actually down for the year. You see here, this is the first week of January 2025. So we're actually down for the year from that 100,000 pivot area and off about 15,000. So we're down about 15% Bitcoin on the year so far. If you're looking at it in that sense, which is what we're doing today. So just excuse me, I'm just looking at some notes I made over here. But obviously, long-term investors, long-term believers in Bitcoin will be holding the faith, looking for perhaps a rally. You can see here, just in the last 2 or 3 years, if you trend lined this, the weekly chart is showing a break of this uptrend here as we've gone back through the psychological 100,000. So The trend still looks like we need to get perhaps lower before we move higher again. But 125,000 was the all-time high. It wasn't that long ago, was it? It was end of September, beginning of October. But the that weekly trend line, the blue line we just put on there for you, has been breached quite significantly. Okay, so as we move into the new year, more about that tomorrow. So we'll come back to this chart tomorrow about where we may go from here. But again, you don't. It's not rocket science, is it? If we look at these horizontal levels here for Bitcoin, the leading crypto, the volatility is clearly there. The size of the candle still. So, but the technical ways of assimilating this market is still valid, given that it moves like any other asset, moves ups and downs in waves and in legs, and we've had quite a significant move down. Is the down move over? Far too early to tell. Possibly, you would say, because of the size of the weakness of these candles over the last couple of weeks. But it is the end of December, and we do get that occasionally, time to time, in the crypto market. There was an indecision there through April and March, spring of 2024, before we went down and then moved up again, down and then moved up again. New all-time highs, new all-time highs, new all-time highs. Significant sell-off, steep sell-off as ever, with Bitcoin in particular, but are recovering. Obviously, long-term believers believe it's a limited market, obviously, so and that's not going to shake their belief in Bitcoin in particular. So, from a technical point of view, we're right smack bang between two key levels: 75,000, 100,000. Wait and see. At the moment is what we're saying over the last few weeks. But if you're trading this on a shorter term basis, it's obviously been biased to the downside, as that weekly chart is telling us. So any questions, guys, about Bitcoin or anything else for that matter, stick it in the question box and we'll do our best to answer it for you. Let's get rid of that. Everything's running. Okay, so that's Billy Bitcoin. No questions. All right, let's move on then. So energies, what a year it's been for oil. I'm just going to concentrate on WTI, West Texas Intermediary, and what a volatile year it's been. Again, the weekly chart, can you see that? Yeah, there you can see the top and the bottom for the last 3 years. Again, we've only got 3 years worth of data here. But you can see the trend has clearly been to the downside since this peak when we went to $95 September 2023 to obviously 2022 with the Russian invasion of Ukraine. We were all the way over $100 odd, but you can see here the lows have continued to get lower even on these weekly charts. The highs, have continued to get lower over the last 3 years, and with the move down this year has been quite significant from the spike we saw in the summer when we went to $77. But the high, interestingly, for 2025 was in the first couple of weeks of the year here in January, when we went to the $80 range. But look at the volatility this year. It's been bigger than last year and bigger than the previous year as well. So the volatility's increased. The bias is the downside. There's no real change to this downward trend as we've come into the year end again into $55. We talked about this in the last few weeks, haven't we? Significant decline. Last time we saw that was the volatility of the Independence Day. What's he call it? Independence Day, Liberation Day, or whatever he called it. That first week of April when the tariffs were announced, and this little board with all these lists of countries. But how many of those countries on that initial board ended up with the tariffs that he first envisaged or talked about? But it's the art of the deal, he would say, wouldn't he? The transactional Mr. Trump. So down we go. Glut of oil in the market. Peace between Russia, well, peace or the cessation of hostilities put more pressure on the oil price. More oil coming to the market from places like Iran, potentially. Talks or the gossip, what I'm hearing, improves. Saudi, key player, obviously. The situation in Venezuela is all about the oil, clearly. But whether we'll get regime change there or not, time will tell, obviously. And interestingly, the attack in Nigeria as well, another big oil marketing or a heavy oil reserve country. Many argue that the oil reserves in Nigeria have been badly managed over the years, both by foreign nationals as well as the local government and industries. But anyway, story perhaps for 2026. We'll see if Trump continues to pursue this, but he's obviously a big believer in fossil fuels still. But anyway, he's a gentleman of a certain age as well. But anyway, where we go from here, again, join me tomorrow. I'll tell you my thoughts for what it's worth and what the technical charts are telling us. But as you can see, the volatility is still there. The trend remains to the downside, and we bounced a wee bit this week, this final week of the year. So commodity oils, in particular, to the downside. Brent's a very similar pattern. The numbers are just a bit higher. In fact, same. You can see the same weekly candle pattern. The lows getting the highs, getting lower. The lows getting lower. The trend is in, and again, $58 from April, and earlier this month is the bottom for the market in Brent. The more of a global benchmark than WTI. Forex, dollar. It's had a bad year, hasn't it? It's been bad year. It's been under pressure with expectations of rate cuts to come. We'll do these in order. Normally, I just come through them alphabetically, but or how they are here on the chart. But let's do them in significance. So the euro at the moment is trading at 117.75, and again, our high for the year is 119. Our low, remember, this time last year, it was going in the opposite direction, wasn't it? We were down at 102. Everybody was crying everyone was crying parity. It looked that way. It moved lower. I haven't actually done that for 2023, but you can just put a line in there as well for the. So we're comparing X-rates. So the volatility in 2023 was much narrower, as you can see here. Let's just put those. We were sort of topping at 112, 2023, 2024, and the low was 105 in 2023 from that big tumble under parity towards the end of 2022. Since then, the euro's come back. We've got more weakness in the dollar, and what a year we've had this year. So it's a very, very strong year for the euro against the dollar. Two things combining, obviously the big fiscal spending that particularly the German and French governments have committed to their defense sectors. Again, Trump will take credit for that. And the euro area generally getting its act together, as the markets are viewing it, lifting the euro against most of its competitors, and certainly here against the dollar significantly. So what was this time last year worries about parity, the euro collapsing into under one again, like we had at the end of 2022, turned around very, very quickly. And here the same, where were we? The same week as stocks collapsed, and the dollar was pressured massively here. The 7th of April, the tariff announcement. It's followed through, and we continue to accrue. So 117.75 at the moment. We've got a bit of a W shape, a bit of a triple top here. We did spike to as high as 119, but 118 remains a key resistance area going forward. But again, more on that tomorrow. But certainly, we're a long, long, long way away from anything like parity or even the 105 area, and certainly we're above the highs, which is key as we look into next year, and we'll talk about more against that 112 area. So, 115, 112, big support zones for euro next year. Big target areas if you're short, expecting the Fed to be quite not as dovish and aggressive in its rate cut plan as many are expecting at the moment. Again, we'll talk more about next year. Tomorrow. This is a review of 2025, and basically we've had a weak dollar, strong euro, and the trend remains set to the upside. So there's no market here, certainly on this weekly time frame. You can see here of shorting that under that 115.70 area. That still looks relatively strong, 117.75, and anything coming out of what everybody from Miss Lagarde down in the ECB chatter about potential hikes from the ECB next year. So not that they're saying that, and she won't say anything like that, but it's easy to take that as it will. But the trend, has been very significant. Obviously, the caveat when we have some significant, huge candles like this is, these are target areas when this finally rolls over. So watch the week of the 7th of April and that week of the German election announcement on the 3rd of March. There were significant sort of paradigm changes, if you like, to things. And as you can see, we're still above that level at that 114, 115 zone for euro dollar that heralded the tariff malarkey. So euro bid against the dollar, and we see this across all of the dollar crosses as we go through. So it's been a weak year for the dollar. The exception, obviously, is the yen, because the yen's been very weak as well. So if we look at dollar yen, it's been going in the opposite direction to all the other dollar crosses. So for 2025, we went as low as 140 at the end of the first quarter. So we'd started relatively high. We started at the 158 area this time last year, and it looked like the 160 zone was going to get was inevitable. Some were saying, I think I might have said something similar, but see, very, very strong December last year as the dollar went back to target that 160 area. Last year, we'd got as high as 162, but, the year before, we'd been as low as 127. So, I should put that in there for context. So that was 2023. I should put so that was the start of 2023. We were all the way down here at 127. Huge, strong year for the dollar during 2023. Strong year, or strong first half of 2024. Give it all back and into 140. So 140 was the low for 2024. It was also the low for 2025. And this is as much to do with weakness in the yen from the appointment of the new Prime Minister, Ms. Takashini, to the upside here at the end of October. That we moved higher, but we had been moving higher before then as well. So the yen remains very much under pressure, despite the rate hike that has come from the Bank of Japan. Finally, we're at 30-year highs for interest rates in Japan, but still the economy remains somewhat moribund. Still very, very benign inflation in certainly in Greater Tokyo and in the wider Japan area. So this again, just like all the charts we looked at today, this is the flip side, the inverse of the weakness dollar. This is a strong dollar against a particularly weak yen. So we've been moving up, and those of you that have obviously traded Aussie yen, pound yen, Kiwi yen, had some lots and lots of strong trends on those pairs in particular. So that remains to the upside. 160. Perhaps we won't get there like we didn't get there last this year as we go into next year. But I say more on that tomorrow. So again, another one that still looks difficult to short dollar yen. Sterling 135, hugely psychological number, 135 for cable traders. We got as high as 138 this year. 140 is up there off the chart here. I don't know how far back. Oh, there we are. 140 was back in 2021. Last year we a narrow range again. So you can see it's the weakness of the dollar that's caused the extended volatility in these dollar crosses. So 134 was our high last year. 123 the low for last year. This year, but again, it was the second week of January. We went down to the 121 area, but since then, sterling has been rampant against the weaker dollar. 138 here at the end of the summer. Come back a wee bit, but these last 5 or 6 weeks of the year has rallied from 131 to 135 at the moment. So a 400 pip gain there. So a break over 135 is key. Fives, zeros, I say it all the time, are quite fundamental, particularly to the dollar CAD pairing. But that's all to the upside. Obviously, to the downside, going into next year. More on that tomorrow. But you can see where hopefully you can see where the key downside areas are for this particular pair. But again, another one that's broken the down leg. That down leg is clearly over. You can see that on that, and we'd be pushing. Again, we'll do this all tomorrow, but fib level will take this to over 140 again into 2026. If we see this move that's started to continue out of there we are. That's next. Oh, this week, isn't it? So that's the final week of this week. That's the final week of 2025 coming to an end. So it's increased volatility, particularly down to the dollar, and even last year, obviously not perhaps as much as we saw in 2022, but certainly increased volatility over the last 2 years for cable traders. So again, bias to the upside, weakness in the dollar. Canadian loonie 136.70 at the moment. The trend, much like the others, increased volatility again from last year, particularly the year before. So we went as high as 147.50. Lows were tested in the summer at 135.50, and we're back down there now. So the rally in the dollar. This is to do with really weakness in the loonie and questions over the trade relationship. We've got the new Prime Minister as well, Mark Carney, this year, and sort of plotting his course. Seem to be getting on quite well with Trump. Then they seem to have fallen out, but Carney will manage Trump, I'm sure, and Trump will manage Carney as well, I'm sure. Remember, Zelensky went to see Carney before he went to see Trump on Sunday as well. So. And Carney very much a global known player, and very much ramping up sort of connections and exercising his experience at the Bank of England to lift his political credentials in Europe in particular, and develop those trade ties as well. So back to 130, under 137 today, 135.50 key low. To the downside. So weaker dollar again in the last 6 weeks. Questions over the Bank of Canada and the Remain over their policy, but again, not much action from them expected. But remember, they were the first to move when we came to rate cuts and rate hikes in this current cycle or the previous cycle as well. So Bank of Canada never rule them out. So 135.50 was our low for 2025, 147.50 our high for 2025, a high not seen for a while, since even in 2020 we didn't get as high as that. So strong initial dollar rally from the end of last year was sold off very aggressively as well. But so you can see pressure or the current trend to the downside for dollar CAD. Aussie and Kiwi, finally. Aussie 67. It's had a really, really good year. The Australian dollar, having started off quite a weak, the first quarter took us into .59, but we're all the way now at 67, and these are year highs just this week. So that's got an even higher. Presumably when I'm late last week or late today when I did these charts. So over 67, we're at 67.20 now, but yeah, it's .67 key level. And you can see, you say the dollar's weakened in the last 6 weeks, but you can see how significantly the move has been for the Australian dollar from 64.50, which was a bit of a pivot base here. Huge move up to .67. So again, another one that remains to the upside. Less Again, quite a significantly volatile year because of the Trump tariff announcement. If you take those sort of weeks out, they take those 2 weeks out, if you like, sort of discount them because of the extremes. The trend has been to the upside all year for the Australian dollar. So 67. Dot 70 is obviously a bit of a much higher of a stretch. We didn't get there last year, 2024. We had been over dot 70 in 2023. What will 2026 bring? Let's see. Is this trend strong enough to continue, or are we going to come back down to this sort of area, the 65 zone for the Aussie? Again, benign year from the RBA, expected next year. But let's see how this their dual mandate most of the central banks have with regard to interest rate policy and inflation and prices. So, and obviously the impact of China is very significant for the Australian economy. So, dot 67, another good year for the Australian dollar against the US dollar. The Kiwi was quite weak initially. Again, first quarter or so. The tariff announcement, you see that week turned it around quite significantly. So we went as low as dot 55 earlier in the year, low we'd not seen since late 2022. We've got as high as 60.61 in the late summer or the middle of the summer, week end of June. And then the dollar came back. The Kiwi weakened quite significantly, probably more significant than many, and moved really, looked like we were back to 55. We got to 56, and then before we saw some buyers. And again, last 6 weeks has been a significant turnaround. Key week there, that end of November, that big engulfing candle, and we've seen follow through buying, followed through weakness for the dollar, helping the Kiwi move up to 58 as we speak. So 60, next big fat round number to the upside as we move into 2026. But will we get to 64 like we saw last year? We shall see. Will we get below 55? Again, time will tell. Just trade with the trend if you're a trend following trader. But you can see it has been quite volatile in Kiwi against the dollar. Big interest rate divergence has narrowed quite significantly. The volatility not quite not as exaggerated as we've seen with some currency pairs. Still way below where it was just a couple of years ago at over 70. The Kiwi against the dollar, so still some upside or some white space to the upside if we do get through 64, 62 zone for the Kiwi. And finally, one of the best performers against the US dollar this year, the Swiss franc. Very, very strong first half of the year. Incredibly strong first half of the year. And then a big consolidation here in this final quarter in particular for the Swiss franc. So we went as low as 78.30 from a high at the beginning of the year for 3 or 4 weeks at over 90. 92 was our high. Dot 92 was our high. It was a high also for 2024, and it was a significant resistance area in 2023 as well. So 90, 92 zone here on the weekly chart has been key. But you can see how much more volatile, thanks to Trump's tariff announcement, 2025 has been compared to 2024. But nothing like the and again, having said that, the volatility again more volatile in there's 2020 comparison as 2023 as well. So significantly more volatile year this year, thanks to particularly political situation. Obviously, the Swiss are huge gold traders, huge gold holders. And that plays into the demand for the Swiss franc as a safe haven currency. And pressured dollar takes this pair down. So 78. 90 we trade at the moment. So we're back to sort of around about the 79 level. But as you can see, a floor potentially forming here. Watch that one as we go forward and as you can see there on a weekly, nice consolidation. So a key range bound pair currently, and has been a bit like that, as I say, since for most of the second half of the year, having had a really strong start to the Swiss franc against the weakening dollar. So there we go. That's the main dollar cross. So the story we've been talking about all year remains intact. Is there more weakness going forward into 2026 for the dollar compared to its major competitors? We'll see. Talk more about that, I say, tomorrow. Elsewhere, the dollar has also been weak against the emerging market currency so far. I don't know if we've got the ZAR on here. We got the ZAR, dollar, rand. No, we haven't got the rand. Anyway, we'll talk about emerging market currencies and emerging markets tomorrow as well. But generally, the story for the dollar has been a weak year, a good year for the. Let's just quickly run through some others. A good year for the euro. Use the euro yen in particular. Massive year euro dollars. We've just seen strong upside. Euro pound as well. It's been to record highs here at 88. 89, not seen for a long time. So this is 2025. So from 82 zone all the way to 89. Again, come back a wee bit. Pound's been okay. I saw Aussie was quite strong, so they've been cancelling each other out. So sideways action against the Aussie, and a bit stronger against the Kiwi for the euro. So euro's had a good year. Sterling's also had a good year, along with the UK stock markets. So we'll come to stock markets in a minute. So if we look at the euro Oz, stronger Australian dollar, sterling down a tad. Obviously, a strong year for sterling against the weaker yen. 210 we trade at the moment, 210. 200 was the big line in the sand. When I was at the we were in Tokyo in November, and at the airport they were offering 220 sterling yen. So yeah, obviously, extreme FX crosses at airport rates. I never use the airport for my friends to change money, but it was just it's just interesting as how weak the yen has been. So strong sterling against a weaker yen across the board there. So, and again, do all the yen crosses going in the opposite direction. So indices, skin in the game still on these. We've had a strong year for the US stock market. Well, globally, stock markets. I was doing some numbers yesterday. Oil was down 21%. We've touched on that before. The NASDAQ is up 21 and a bit percent currently. Let's start with the NASDAQ. Sorry, it's still got pound yen. Sorry. Any questions, guys, about anything? Any of these markets? Do let me know. Now then, we did this last week, didn't we? About the so we are sort of projecting forward into 2026 here for the Nasdaq. But as you can see here, increased volatility. That's been the story of the year across all the markets because of the tariff situation, because of the interventionist nature of or transactional stroke interventionist nature of the Trump administration in particular. So earlier in the year, the NASDAQ touched 16,500, which was a low also for 2024. Much narrower volatility last year. Strong gains last year, 20-odd% again for the NASDAQ. Strong gains in 2022, as you know the story, to the upside. And a rally and all-time highs earlier in the winter months here for the NASDAQ at 26,000. 24,000 proving the big support area this year. So as we can see, that last leg down there on this weekly chart, suggesting that the Fib extension level, the 1.618 Fibonacci extension, takes us to 27,700, assuming we can break the 26,000 level. So that's what the bulls will be looking for going into 2026. So we'll reiterate this all again tomorrow. But 2025 has been a big gain year. We are up 50% here from this September, the April 7th Nadia down here at 16,500 up to 26,000. That's a 57% gain, 21% from year to date, when we started here at 21,500. So stock markets continue to gain. The story about the overheated AI bubble, that story won't go away, but it's not really impacting investors particularly. They're still piling billions, trillions of dollars into this building the infrastructure, particularly in the United States, the electricity, the infrastructure to get that electricity to where the data centers want to be, building the data centers, the investment in the hardware, the investment in physical infrastructure. And that will explain when we come to the commodities why we've had or one of the reasons we've always had such a exponential rally in some of the commodity markets, particularly in this final fourth quarter of 2025. So somebody said this morning on Bloomberg, digital eats physical. He means basically if the AI boom is continuing, which remember it's been running for 2 to 3 years now, it needs physical stuff. So copper cables, circuit boards, printed circuit boards, all of the commodities that we dig out of the ground, gold, silver, platinum, copper, all heavily in demand to actually feed this digital expansion. Obviously, the question marks will come: is the return on investment making sense? At the moment, it's all been driven by this particular market, the Nasdaq, and where all the tech stocks sit. And as you can see, it was unheralded for the first 3 quarters of the year. Certainly, this second 6 months from sort of April through to this all-time high we got in November, and then over the last few weeks, been some question marks raising their heads. But the earnings, which is what stocks are, what investors look to price this investment in stocks, still remain. We've had a great 2025. That it looks like 2026 is going to be pretty good as well. So that's the real thing. As I say, it's all about the price. How well are these companies doing compared to expectations, compared to their competitors? And the Mag 7 continue to outperform. So snowball effects always play out in stock markets, and that's what we've seen over the last few years, and particularly another strong 2025 after a strong 2024 and 2023 as well. So the Santa rally has happened this year. We're down a bit today, but we've bounced first 2 weeks, and we're up again this week. Obviously, lots of institutions will have cut their December accounts on the 19th, some on the 26th. Some run it, technically to the end of the year, so a few days next week. Tuesday, next week. It's this week, isn't it? What I'm talking about. It's already Monday, so we got 29th, 30th, and 31. Still technically 2025 trading. Depends how they cut their accounts. I say it's the end of the month, end of the week. They run it on a weekly basis. I'm running my own personal. There's a few trades still open on these indexes. I may take some off just to round out the data, the accounting for 2025 over the next few days. But I'm still long these markets on my positions from the previous end of day entries. So stock markets, index, Nasdaq, strong, positive, and it's had a good 2025, a great 2025, in fact. Upside targets is originally 26,000, 26,250, where we got that intraday high from the end of October, the all-day high, and then the fib extension, which many will be programmed in many algorithms, takes us to 27,700 on the Nasdaq 100. This is, remember, guys, not the wider Nasdaq; it's Nasdaq 100 here on this particular chart. And we're getting a similar story on the other US markets. So I'll come to the European ones in a minute. So I'll go to the Dow, which has performed better. In fact, it's less sensitive to the rate hike, the rate cuts, and it's continuing to accrue. As you can see, it's already through its last leg down. So they go back to the Nasdaq. We're not at the top of that peak yet. The Dow has already done that. It's recovered better than some of the tech stocks over the last few weeks. So we're at new all-time highs last week. again, and moving higher. So the beginning of December, we went to 48,800. The extension on the fib takes us to the 50,000 level. Again, that's a big, fat, round psychological number. Again, I'm not going to say inevitable, but that very much in striking distance for the Dow. We could see quite a significant sell off of when we get to 50,000. We could burst through it as well. But you see here, in simple terms, the Dow very much bid, very much a strong move from bottom. It's up 14% year to date, the Dow, and then from the floor here again, it's up over 50% from this floor of 36,700 on tariff week, tariff announcement week, 36,000, 38,000 to 48,000 plus. So the Dow also rallying strongly. We've still got skin in the game on that one as well. I think it's not Dow. Is it the Dow? That's, yeah. I forget all these one. I haven't got the trading platform open in front of me. So the three indices. It was the Dow, the S&P. Oh no, it was the Nasdaq, the DAX, and the S&P. It was. That's not. It wasn't the Dow. But anyway, that remains a bid to the upside. We'll look at tomorrow what 2026 could bring us. And finally, the world's most important stock market, the S&P 500. Again, similar pattern to the Dow through its previous top here high. This last week, 6,900 has been breached. We're at 6,912. So obviously that brings in the key big fat 7,000 number if the follow through buying continues into January. And then the fib extension for this one is 7,170, 7,100 next upside target for the Dow if this continuation continues. Support there at the key 61 fib of this last leg is at 6,660 in round number terms. So the S&P 500 also on the upside. Across the water in Europe, the DAX 24,300 at the moment, and again, a bit like the last few weeks, like the US markets, but much more of a consolidation here for the second half of 2025 for the DAX, and 24,000 being a key pivot area as we go into 2026. Obviously, we had that, as I say, we had the speculation over the particularly the investment in defense stocks following the increase in spending, fiscal spending in Germany, particularly following the new chancellor. But you can see here, the DAX has been moving quite nicely anyway over the last 2 or 3 years. Had a strong 2024. It's had a had a strong 2023. It's had a strong had a strong 2023. A better 2024, and probably what looks like a potential as good 2025 as it's had 2024. So the DAX, from the maths I was doing yesterday, is up 25%. Again, another one that's up 50%. So it's up 25% year to date at the moment, and over 50% from the Trump nadir low here, which took us to 18,800. Interesting stat I was reading about this morning, again, is for next year, but I should save that for tomorrow, actually. I'll save that for tomorrow about Euro investors. Because of the rate of the euro accruing against the dollar, how much they've actually made against for their S&P investments. If they've, given the fact that the euro has accrued so much against the dollar, it undermines their investments in US stocks, doesn't it? So very, very little gain, ideally. Made a gain, but not a great deal, to be honest. So NASDAQ 24%, S&P 17%, Dow 14%, and the NASDAQ 21.5%, yet again, outperforming the other two indices. DAX doing very well. However, here in London, we've had a blockbuster year for the FTSE. Miserable returns last year, 3% on the FTSE last year, and a monster move this year for the FTSE. So a stronger sterling and lots of money. Contrary, well, this is what this is showing me. suggests there is investment flowing, contrary to what the popular press might tell you, or you might read elsewhere. There's support for for UK companies. Big volatile year, obviously. Again, the April nadir took us to 7,535, but all-time highs were at the beginning of November and was pushed higher again in this first week of December. Obviously, lots of markets closed, but 9,900 has been breached. 9,935, the top for the FTSE. So finally, the FTSE's playing catch-up with its US stock markets and its European counterparts in the DAX. So 20-odd%, 31% when I did my maths yesterday. That's a 31.83% for year two, from low to high for the FTSE, and a 20.86%. So finally, from a painful 2023 and 2024 for the FTSE, that's 2023 as well. Increased volatility has seen buying for FTSE stocks. So the FTSE in the UK, one of the best performers. Spanish stock market as well, completely out of massive amounts this year as well. I noticed that this morning. Italian stocks doing okay as well, but Spain was the one that jumped off the page at me. Spain recovering really strongly, their stock market, but FTSE up strongly as well. Yesterday, as I say, 20.86% when I did the maths yesterday or the day before, 31.85% from that April low. So again, bid into 2026. Stock market's doing well. I haven't actually done this for the Nikkei, but we've been trading the Nikkei this year. Obviously, the impact of the new prime minister being very, very significant there again. But again, another one that's rallied strongly during what's we gone? What's July? This is weekly. I want 2020. What's 2024? During 2025. So that's mark this one up. Sorry, but again, upside. Again, bit of consolidation here for 6 weeks for the Nikkei, but interestingly, it's struggling with this resistance there, that fib level. So watch that one as well. It needs to break over that 50,750 as we go into next year. If this is going to move to this 55,000 level, that's looking less bullish than some of the others, given the key resistance areas are at this key fib level of that leg down there. You can see that one there. That's the key. See, we've since it's been established, it's been 1, 2, 3, 4, 5 weeks before that's breached. But equally, it doesn't want to go below that 50 level there at 50,300, but it can't get over 50,800. So it's in a 500 point range for 6 weeks, which is quite tight, or very tight for the Nikkei. So watch that one as well. As the impact of rising rates. Was it a one-off? How much political pressure is the Bank of Japan going to come under? Can they continue this cycle to the upside? Can they finally get the Japanese economy moving? Doesn't look like at the moment, to be honest. All eyes flip across the South China Sea to China and their efforts to stimulate their economy as well. So, say more on that tomorrow for 2026. But the Nikkei perhaps less buoyant, although hit all-time highs as well than the US stocks. But the overvaluation, many are saying, of US stocks could move equity investments further around the world than it has done in the past, and China might benefit more than Japan. But see what interest rate policy looks like from the Bank of Japan. It could then stimulate some more Japanese investment from overseas investors, but certainly Europe, Latin America, even parts of Nigeria and South Africa talked about as a potential destinations for international investment as well for 2026, 2027 with this very, very hot US stock market. So is it going to be a burst, or is it going to grind down slowly? History tells us it tends to be bursts rather than slow cool downs. But we'll see how the new Fed chair has an impact. But again, more on that tomorrow. Killian, hello, my friend. How are you? Happy holidays to you too, my friend. Hope you're well. How's your 2025 been? We've got the Nikkei here. It's had a good year. It's been up. And finally, Kalina, John made a good point. Finally, the blockbuster stocks of 2025, without any shadow of a doubt, has been the commodities. We looked at oil early; it's still in the commodities regime. Yeah, and Killian, interesting here. Bank of Japan really stimulating gold movement. It's not only the Bank of Japan; it's everybody. My friend, I don't know if you got any inside information around which Bank of Japan, particularly in the Swiss, are obviously big buyers of gold, but all central banks, all governments as well, not just central banks, but governments spending. We'll start with gold, but really silver, copper. I mean, silver in particular, but gold. What a year it has had! A huge move. Gold up 73%. Year to date, 4,500 has been breached, new all-time highs last week and this week as well. Big sell-off going on today, though. Oh, look at that. This is the weekly candle, remember, guys, but this is only for today. Big, huge profits getting taken there. So first fib level, if indeed that is... No, hang on a minute. That was that level, wasn't it? That was this leg down. That was that, just that two down. Yeah, it's a bit... that's probably still in play, 4,682 to the upside, but a big sell-off going on today. Anyway, that's just today's going on. What are we seeing? We're seeing this huge burst here for gold. I touched on the reasons why gold and the other commodities like copper and silver have sort of gone exponential. All sorts of fundamental things going on earlier in the year. Look, it wasn't only the second half of the year. It was going on at the beginning of the year. If we go, sorry, this is, if we go back, I'll zoom this in, you can see what an absolute blockbuster. And I think that's not a chart I probably want to leave you with. Look at what was going on for years, over the last 4 or 5 years, 5 or 6 years here for the gold market. Very benign movement, still biased to the upside overall. So, but you know, here 2022, it finished absolutely flat, up a bit, down a bit, flat for the end of the year. Up a bit for 2023. 2024 breakout, moving up over $2,000 an ounce for the first time significantly. We stalled at 2,300 through the sideways action, then strong second half of the year again. Took us to a high of 2,800, 2,700 range. And we started 2025 at 2,600. 2,600 for an ounce of gold, whereas a few years ago, you know, it was back here at 1,600, so it gained $1,000 anyway. But what an absolute blast it started off 2025 with. So we were trending higher every single week for the first 10 or so weeks of 2025. We had our first down week at the end of February. We then went another high for 6 weeks. That key week of the 7th of April, which we've seen on all the charts this week, this year, haven't we? Because of the tariff announcement from the President Trump, lifted gold to then a new all-time high at $3,240. 3,250 was the resistance area through the summer, and then the breakout week was this beginning of September. The summer, August, July, June consolidation was over, and we started September off over 3,300, and off we went. And there's been no looking back since, really. Profit taking here towards the end of October. Profit taking here towards the end of December. Quarterly profits getting taken off the table at the moment. I was saying, well, see what the week kind of looks like. But, you know, these are all-time highs, consecutive all-time highs like we had at the beginning of the year. We've seen that since the beginning of September. Consecutive all-time highs, these weekly candles. Bit of a shakeout for a couple of weeks. Then we've gone higher again. And then we've finished the year very, very strongly through $4,000. 10, 12 weeks now, over $4,000. $4,500 was eventually targeted and taken out last week. And obviously, as I say, as I speak, we're giving it back quite significantly at the moment. But that fib level is still valid, given, I mean, it's a very short retrace. It was only a few days, wasn't it? A few weeks. But that fib level is still valid. 4,682 is the next upside target for the bulls for the gold market. And really, what's driven it this year, at the beginning of the year, the end of the year, is still valid. We still got lots of fundamental changes. We still got yeah, Killian's talking to me here. Sorry, Killian. Yeah, let me just put your comments up on the screen for everybody. Yeah. Well, I thank God for 2025, especially for health and community. Absolutely, my friend. That's, you can have all the money in the world, but if you're not healthy, you're not happy, it counts for nothing, does it? But stay happy, keep smiling, my friend. Commodities have really been good for investing this year. Unlike last year, it's been a volatile year, especially with the Trump tweets. Exactly, Trump, of course, he doesn't go on tweets anymore, does he? They're what are they? Truth Social posts, because he owns that, doesn't he? So he posts on his own platform. Nobody's going to contradict him, is he? Nobody contradicts him anywhere, do they? If he does, he throws his toys out of the cup. So, will it continue up in your opinion, or will it consolidate more sideways to 2026? Well, I'm a trend following trader. So here, if we look at the weekly chart, we'll talk about this more tomorrow about the weekly chart, about the trends for 2026. But that is far from over. I would argue, yes, at the moment, but you can't. Again, as a weekly trader, you're not looking at this current red candle. That's a positive last 5 or 6 weeks, and a massively positive 5 or 6 weeks. So profit being taken off the table undoubtedly, or maybe getting manipulated when we got to 4,500. But the fundamentals are still there. There may be some significant cooling in the geopolitic stress for 2026 if we see a significant and lasting peace deal, particularly between Russia and Ukraine. Obviously, the situation in the Middle East still remains quite volatile. It doesn't necessarily impact the gold market to that sense, but it's the undermining the sentiment really consists, because that's it's faltering, one would argue, quite significantly, the situation, and it's slipped off the headlines. Unfortunately, there's still lots and lots of grief in Gaza. And that situation is far from over. Neither side got what they wanted quite significantly. I was surprised that it did actually push through. So that's driven it. The fundamentals with regard to the buying of places like China, the central banks in Switzerland, the emerging market central banks as well. They've been another big buyer of gold this year. As a defense against their economies, and obviously the weakening dollar has helped them as well. It's not helped them because they've got to pay for lots of stuff. The weakening dollar will help them to an extent, but they've moved into solid investments. It's all about uncertainty. But the other thing I haven't mentioned is the massive debt that's held, particularly in the Western developed economies. The emerging markets now, when you look at some of the debt there, it's not as scary as it used to be a few years ago. So, there's lots of potential higher returns for some of these markets than we've seen in many years. So it's been talked about this time of the year. I remember I've talked about this, go back to my end of year talks for different brokers I've worked with. We've talked about you can't ignore emerging markets. There's always the potential that it could be the year. They've had a pretty good year for 2025. I've got no charts to show you that here on Trade Locker, but emerging markets could be the breakout story for 2026 at long range. But it's the volatilities, like you say, Killian. But it's all been in one direction. So gold's had an absolute blockbuster year, up 73% year to date. Obviously, perhaps it isn't going to be that at the end of the year. But when I did my maths yesterday or the day before, it was up 73%. But the big one is obviously copper. And the one we've got here is silver. Silver is absolutely parabolic. Look at this. This is completely mental. We went just rallied. And again, you can see consolidation, the sideways action for year after year after year, and then a complete breakout for silver. And the silver even more aggressive in this final 6 weeks of the year than gold. Again, it's the same story. It's the same story that's driven gold and the other commodities. As I said earlier, that digital eats physical. This guy said on, and some things up really nicely. Silver is required for these. Not only is it a precious metal, it's a significant industrial metal as well. So as these processings, these hardware, this electrical infrastructure gets rolled out or improved in the US. It's terrible in the United States and parts of Europe as well. That's something the Chinese are leading on very, very aggressively. The solar panels remain very significant gobblers of commodities, and so silver's benefited from that significantly. And we went all the way to $80. This is parabolic charts. I hate parabolic charts. It's always a bit spooky. It's always a bit of a panic. It's always a bit of a fear of missing out in this last few weeks for some builders. But you're buying up here, you could get burnt. But is this a realignment because of the AI bubble, the AI boom? It's finally moving away from the software and the actual companies in benefiting from potentially benefiting from AI. There's still lots of questions about how much real benefit is going to come, but you can't argue with the amount of money that's been committed. The questions will come over the next couple of years about the return on that investment, but at the moment it's still pushing forward. Obviously, those big questions over the Oracle investments, and remember they went up something like 36% or something in one day. But there's been big drawdown in Oracle, and some questions over there at the amount of debt that they've cut and how they're actually accounting for it as well. So expect some more stories like that for next year as well. But again, say more on that tomorrow. Killian, you're right. There's also that banks, because of the weakness of the dollar and the BRIC economies, talks have been main contributors factor. This, I mean, that's been kicking around for many years. The BRIC economies and the de-dollarization of the world. But again, my answer to that still remains the case. I still strongly believe, it doesn't matter what I think, does it, or I believe, but it's for my view for what for what it's worth, is that the dollar will remain the dominant currency, certainly in my trading career. But maybe proved wrong as well. So obviously China and Russia and India are trying to move that forward, but they seem to be falling out all the time as well. So, but we'll see. If the Russia comes on board, Trump tries to do this realignment of the world. It's obviously started in 2025. It's realignment of the of America, Russia, and China as the players, and still turns its back on Canada and Europe. We'll see. We'll see how all that goes. But I can't imagine that going down too well in the Trump White House. Can you? So we'll see. Killian, does that mean buying stocks of companies manufacturing electronics, as silver is one of the main ingredients for electronics manufacturers, plus price of computer components have really gone up? Indeed, that is the case. But this is, that has happened. But they're getting gobbled up. If you could build, as we've been saying for months now, if you're going to build these massive data centers wherever they are in the world, obviously Trump wants them all in the United States, but then that's the biggest gobbler of them. It needs stuff to be manufactured, to be installed in there, and that consumes commodities, which is why I haven't got the copper market here, but why copper went over $12,000 a ton, and that copper cables are still. And silver and copper in circuit boards and on all this infrastructure. If it's going to happen, they're going to need this equipment. So silver miners, gold miners, stocks have all done very well as well on the back of the big commodity rally. But this really is the chart of the year, the silver chart, going from 28.50 this time last year. Here we are. It was the 23rd of December 2024. It was $28.75 for an ounce of silver. And this week, just today, in fact, if I took this down to the daily chart now and zoom it in a bit for you, you can see even today, this morning, it must have been this morning, wasn't it? We went to $84 here on this derivatives chart. So the futures market must have been at 85 and even higher, but a big engulfing candle starting today. But the key thing was it went over $80. I mean, what a massive, massive rally silver's had. So yeah, I mean, there's lots of the the data players, the power players, some fantastic returns for 2025, 2024 for these companies, and still to come. Many investors are saying, the big players, for at least the next 2 years. So it's not too late in that sense. I would argue, be careful, with this silver move. Perhaps gold a bit less so, but inevitable. Again, profit isn't profit until it's taken off, till it's banked, and that's what's happening today, clearly, on that silver chart. You can see $54 key support area there on a daily basis. 64 was a resistance area. 60, but it's just gone, ballistic. So lowish volumes as well. So just be careful, obviously. But yeah, strong move, Killian. Yeah. Exactly. So, what stocks that were out of fashion are perhaps coming back more into fashion. But again, it's as with any investment, it's the return on your money. The broadening of the stock market rally didn't really happen as much as many were saying this year. So the out of fashion stocks like some healthcare has come back a wee bit. But if you look at the S&P as an example, it's a bad chart because of the weekly chart. It's continuing to move. That's the daily, it's not the weekly. It's continuing to move higher. So the faith in the earnings of the US stock market is still there. It's just, as I was saying earlier, there might be some better investments in different parts of the world. Certainly always deemed riskier, but as we saw with the movement in the DAX and the FTSE in particular, they've done very well. And I say the Spanish, I don't know, we've got the Spanish. No, we haven't. The Spanish stock market has well done really well here in Europe this year. So there we go. But let me just leave you with, as we wrap this up, been here an hour and a half now, prattling on. Let me leave you with the silver chart, because I think that, as I said earlier, that really for me is the chart of the year. Silver up 180% year to date, from 28.50 to 79.50 yesterday, and even higher. Today went over 80, but we're back to $71. What a big sell-off we've seen. But anyway, huge numbers. Tomorrow we'll look at what is in store for 2026, the debt mountain that still hangs around, interest rate policies for the central banks, where Forex, where the commodity market goes from here, where the oil market goes from here, and where your investments go from here. Okay? Take care, my friends. I'll see you tomorrow. Be good, be safe, and updates on 2026 and 2025 tomorrow. Take care, everyone. All the best. Bye-bye. And finally, don't let me forget, where's my those of you with smaller end of the market, you've got a $5,000 account. You can get a $10,000 account for the same price as a $5,000 account. That deal that was terminated on the 28th has now been extended. Closed last night. We've extended it to January the 1st, very much in demand. So take care. Killian, thank you for being here, my friends. I hope I'm pronouncing your name correctly. 360, Killian 360. Be good, and I will see you all the same time tomorrow. Take care, everyone. All the best.